Hello and welcome to Startup Street. I'm Shruti Mishra. The Indian startup ecosystem saw $10.6 billion of venture capital investments in 2020 so far, lower than the $12.5 billion seen in 2019, according to the latest data from Venture Intelligence. The total number of VC deals stands at 648 so far in 2020, much lower than the 833 deals in 2019 and 731 deals in 2018. This is the lowest number of deals in the last 5 years. The sectors that bagged the highest VC funding include e-commerce, which saw $2.32 billion of funding, followed by Edtech, which raised $2 billion in funding. Next on the list was logistics, that raised $1.71 billion, followed closely by food tech, which saw $1.45 billion in funding, and then fintech, that raised a funding of $1.4 billion this year. 2020 also saw 10 new unicorns, which is higher than the 9 unicorns created in 2019 and 8 in 2018. The unicorns of 2020 are Pine Labs, Unacademy, Postman, Nykaa, Daily Hunt, Cars24, Zenoti, Razorpay, Zerodha, and Glance. To take stock of 2020 and to find out what 2021 would look like for the startup ecosystem, joining me now are Karthik Reddy, Vice Chairman, IVCA, and co-founder and managing partner at Bloom Ventures, Shanti Mohan, co-founder and CEO of Let's Venture, Pankaj Makkar, MD, Bertelsmann India Investments, and Vinay Bansal, founder and CEO of Inflection Point Ventures. Many thanks, everyone, for joining us on Startup Street today. Karthik, let me start with you. How has COVID really impacted your portfolio startups? What are the kind of conversations you're having with them? How you're really helping them tap into the tailwinds of COVID and growing faster?
Thanks for having me, Shruti. You raised an important sort of statistical numbers on 4 or 5 subsectors. So clearly, the sectors which are talk or speak of essentials to the Indian consumer are the ones that have done incredibly well. Even amongst the unicorn list, if you noticed, you spelled out a few B2B companies. So what we've seen clearly is, companies which have, fundamental demand in a difficult year like this have done very well. So you don't sort of, back down from those companies. You try and get them more capital, and you figure out what the best practices are to be able to ensure that they can continue running and scaling. It's not easy to add new people to your business and to your employee base while you're all working remotely. So those challenges apart, I think we focused a lot on trying to distill best practices from the industry and have each of these companies learn from one another and try and drive a lot of growth capital into these best companies. Okay.
Also, Karthik, I want to know from you, what is Bloom Ventures' outlook for 2021? What are the kind of investments you're looking to make?
I think it's going to be another year of fundamentals. I don't think we're going to switch on a button on Jan 1st and have a brand new year. I think it's going to be a slow, grinding recovery. People need to figure out what their priorities are, and a lot of international investors are going to continue to be focused on their home markets. So until there's a market leader in your segment, and if you've created one out of your portfolio, then you will see a huge breakout happening within your portfolio. Otherwise, you would focus on backing your own winners for one. I think running behind a new company is very tempting, but not without ensuring that your value drivers are doing very well. And amongst the new sectors, you'll stick to the fundamentals: health, education, financial.
All right. Okay,
services,
Karthik.
Commerce, logistics.
All right. Pankaj, let me come to you now quickly. You focus on Series B and C stage investments. What are you telling your investee companies? Anything in particular that mid-stage startups should definitely keep in mind?
I think for us, COVID has been a pretty kind of crazy year in terms of pretty unprecedented. So our first advice to all our startups was to make sure that they have runway till end of next year. Only if they survive, they can grow. So that was the first key kind of view or that we gave our companies. And then once they got over this whole runway issue and they can survive for a fairly long period of time, start thinking about how you can use COVID as a tailwind to grow.
Also, Pankaj, BII did not make any direct investment in 2020. It did increase its stake in portfolio companies. But, will you be looking at making fresh investments in 2021?
Yes, I think this year we made, 6 to 7 investments in our follow-on kind of round. But, and I think all the companies are doing phenomenally well. They are growing very fast, very similar to how Karthik was kind of talking about his companies. we are now starting to look at new deals as well, and we do think that we'll make a couple of investments in 2021 as well.
All right, we'll surely be looking forward to that. Vinay, coming to you now, you're an early stage and pre-Series A kind of an investor. You made 30 investments this year. How was your experience with your portfolio companies? Also, what should be the focus area for early stage startups?
Sure. I think for us, as Karthik rightly pointed out, fundamentals have to be solid and strong, so we continue to focus. The other thing I will add to what Pankaj and Karthik said is focus. What we saw is what distinguished great companies from normal companies in the last 9 to 10 months were the ones who really were very fast focused on what they wanted to do.
Okay.
We had 2 or 3 health tech companies. One of them tried to, let's say, ride the tailwind of COVID and, try to diversify from what they were doing earlier.
Okay.
Other guy, very similar space, but did not go down, selling masks or trying to get other stuff. Succeeded very well, got their next round Series A done recently. So focus, I would say, I would add to the fundamentals and to the runway.
Okay, going back to the fundamentals. Shanti, let me quickly get you in. From the trough in April and May, the early stage startup space really did bounce back. At Let's Venture, you've completed 105 funding rounds. What stood out for you, Shanti? And take us through some of the noticeable trends.
Yeah, thanks, Shruti, for having me. And just to kind of give a summary on 2020, for us, Let's Venture, it has been a phenomenal year. Yeah. What we have seen is just like in the public markets, like new investors entering the public markets, we saw a very similar trend in private markets, right? So 2020 was a record year where we actually saw about 1,000 angel investors come on to the Let's Venture Angel AIF, right? And out of that, about 37% of them were about CXOs, professionals, and 45% of them were new angel investors. So really a deepening of the angel ecosystem, a lot more people entering the private market asset class, right? So that was the first big trend we saw. Okay. The second we saw was that VCs were actually now looking at coming to digital platforms to syndicate deals. So out of the 105 deals we did on the platform, 35% of them were done with VCs, syndicated with the larger investors. Okay. And VCs, along with founders, are now valuing the value capital coming in from fundraising platforms. Okay. So that was a very second interesting trend. Okay. But I think on the founder side, if you look at it, just to kind of quickly talk about the founder side of it, we saw about 35% of our founders, again, were second-time entrepreneurs. They were actually ex-VCs. So a really mature of the founder ecosystem. Okay. Right. And of course, with the Let's Venture Plus platform, which we can talk later, but basically the Let's Venture Plus platform is the growth platform. Sure. And we onboarded 200 family offices, all digital, all on Zoom.
Yes, we'll come back to that, Shanti. Pankaj, let me come back to you now. Edtech saw the biggest boom and attracted over $2.22 billion in funding in 2020, versus $553 million in 2019. Will the growth story continue in 2021?
We are quite bullish that the growth story should continue. Okay. The key reason we kind of say that is because education in India per se is around $60-odd billion of revenue every year, out of which right now only $1.5-ish billion is coming from EdTech. That's a very small percentage share of online/EdTech in the overall education sector. I do think that it has the potential to reach at least 10 to 12% penetration, to make it a $5-odd billion market.
Okay. So, Vinay, do you agree with Pankaj? While the battle for a clear winner in K-12 continues, would the new battleground be higher education?
Well, while I agree with Pankaj, I cannot talk about where the new battleground will be. To me, battlegrounds occur when you have a great problem to be solved, and then it is chased by some really great founders. I think higher education is definitely an area of work, but predicting is not something we do well on. What we really do well on is building sound business fundamentals and backing great founders.
Okay, so let me get in Karthik here. Karthik, Byju's, Vedantu and an academy bagged a lion's share of funding in the Edtech vertical. Of course, Byju's and an academy being the two unicorns in the Edtech sector. And while there are several unicorns in the fray, will smaller Edtech players get funded, or will funding fatigue set in?
There still seems to be, the frenzy still seems to be on. I think the point that Pankaj made is the market is large enough, so people will try because, if the larger three players focus a lot on their core areas, there could be flanks on the left and right where they'll be able to build a sizable enough business and get a decent acquisition outcome, if not become a standalone unicorn. And that's how startup venture ecosystems are built. The second interesting point, I think, which we saw with the White Hat story and a little to the extent of some of these post-graduation education platforms as well, skilling platforms, or learning courses from overseas, is that Indian education platforms have a tremendous capacity to envision scale, beyond the first 2-3 large markets in the world, China, US, UK, and Canada, which means that we could potentially be building some of these platforms and taking them to global markets. And then the market changes entirely. The description of the market is not 60 billion anymore. You could be solving for the entire American school audience or the post-grad audience eventually. So of course, it's not like the home entrepreneurs will leave those markets for us, but I think there is a incredible opportunity to go and win some of those spaces as well.
Okay, so EdTech acceleration will continue. Shanti, let's move on to another big trend that we saw this year, digitization. Companies went digital across sectors. At Let's Venture Plus, you had family offices investing at growth stage online, which was unheard of. What's the larger underlying story here?
So my belief is, till this time we had an income divide. Now there's going to be a digital divide in India, right? So there are going to be traditional businesses and there are going to be digital first businesses. And really, when you look at family offices, they are not investing or they are not looking at private markets is not an option anymore, right? Because globally, private markets has become bigger than public markets. And you have to look at, when you look at your asset allocation, you have to look at allocation into private markets. And because of this pandemic, what we realized is that in the first 2-3 months, family offices waited. They thought that they might be able to then meet and then take the investment decisions. But the investments were happening, right? And they were forced to kind of adopt the digital behavior. And that got validated at the Let's Venture Plus, where we actually onboarded 200 family offices, all of them on Zoom. And we have raised large funding rounds for CDC companies. We have done liquidity transactions on, right? And really that is about, that is something which we had worked on, Shruti, 2 years back. Right? 2 years back, we actually started working on the Let's Venture Plus platform. We also built a digital product to digitize cap table and ESOP management.
Yes, Shanti.
And they launched during the pandemic.
Right? It was quite an action-packed year for you at Let's Venture. Pankaj, take us through some of the other trends that will play a crucial role in changing the overall growth parameters for the Indian startup and investor ecosystem in 2021. Will it be, consumer internet businesses or fintech or health tech?
So we think that anything which is fundamentally touchless, because COVID pushes us to kind of interact in a touchless fashion, all of those business models will do very well. So we are quite bullish on direct-to-consumer plays as far as e-commerce is concerned. We are excited about enabler businesses, whether logistics and so on, which are riding that wave. While some of the market is not excited about fintech, we think that finally banks have woken up. And they will partner interesting fintech companies, like in one of our portfolio companies, Rupeek, is a case in point, where they will build large businesses. And of course, education and healthcare technology investments will continue. So I do feel that it's very exciting times for startups and venture capitalists.
All right, exciting times ahead. On that note, it's time for us to take a short break, but don't go anywhere as we continue our chat and talk more about M&A, listings and more. So stay tuned. Welcome back to Startup Street. Pankaj, let me start with you. Is consolidation the way forward? We saw Byju's acquiring White Hat Junior. Pankaj, what according to you will be the key acquisition and merger trends in 2021?
I think acquisitions should be done in a current startup ecosystem. It's much needed. Acquisition should be done in our minds for three reasons. Number one, making sure you join hands with a competitor because there is less room to grow. A lot of the horizontal e-commerce players, as well as large players, a lot of unicorns should strive to kind of merge with their competitors so that eventually they should be profitable. And we do hope something will happen. The second type of acquisition, which was done by Byju's for White Hat Junior, is essentially buying out a capability in an adjacent sector. I think that trend should also continue as we look for large outcomes. So I do feel that for these two reasons, M&A should continue and will continue for the next 2 to 3 years.
Okay, so M&A will continue for the next 2 to 3 years. Shanti, let me get you back in. There are multiple exit strategies, but for early investors or angels, until a big fund comes in, exits are difficult. Even if you talk about ESOPs, until a big buyback happens, wealth creation for employees is missing. Do you see a move towards more companies wanting to create more periodic liquidity for their shareholders? What trends are you seeing here?
Yeah, so I would kind of attribute this to more to the maturity of the ecosystem, Shruti, because today, as you look at this decade, we have a lot of companies which have already created value. I think what is missing is the digitization of the organization of private markets, right? So really at Let's Venture, that is what we are trying to do, is offer a very easy way to actually plug into that infrastructure stack where you can then offer liquidity solutions to your investors and to your founders. And with the Let's Venture Plus platform, we have seen a very huge validation of that requirement today. So really, it is kind of a combination of the maturity of the ecosystem, the pandemic coming in, where now founders are looking at rewarding their employees because they are now trying to use ESOP as a way to retain the good talent, the valuable talent, right? And really, all of this coming together is the trend we would see in the next coming few years in the ecosystem.
Okay. Let's talk about another trend and talk about the startups that made a big splash in 2020. Vinay, coming to you, the year led to 10 new startups joining the Unicorn Club and even saw the birth of a decacorn, that is Byju's, following the footsteps of Oyo and Paytm in the years before. How many unicorns will 2021 see?
Well, that's, again, it's a very interesting question, but I must say one thing. I was talking to one of our IPV-funded founders today morning, and he said he entered the Unicorn Club today.
Okay.
I can't name it, but it sometimes is very fast. We funded in 2018, and in 2020 he's made it to Unicorn. So it's very unpredictable, honestly. I think the trend is set to grow directionally. If we saw 10 or 20, we're definitely going to see 2x, 3x next year.
Okay.
Exact number I don't know.
Okay.
But that trend is definitely going to continue.
Okay.
And we track actually more of what is the revenue these guys are generating, right? Rest valuations will follow. Valuations is not something we really are very, very focused on.
Yeah.
But building great businesses is what we follow. Valuations and unicorns will come.
Absolutely. Very, very valid point made there, Vinay. Karthik, let me come to you. Something that just happened recently. SEBI proposed a range of changes to encourage local technology startups and other new age firms to float initial share sales after last year's regulations sort of failed to nudge anyone to go public. What are your views on its proposals?
See, the institutional trading platform that they spoke about is something we've been talking about for a while, because I think historically the objective was, if you have loss-making companies, how do you get them to the public markets and get at least what, Shanti is getting on our platforms and Let's Venture, can we at least get those kind of investors to start getting more active on a SEBI-governed platform. Right?
Yeah.
So that was the initial push. What I find more interesting is directionally two trends that I think might overtake the need for the institutional trading platform. But I think net both go hand in hand. So what we are thinking will happen is IPOs in the Indian market over the next 18 to 24 months, because enough companies now have reached that tipping point, whether that's Delivery, Nykaa, Lenskart, Policybazaar, somewhere sitting between $1 billion and $2 billion already, and have the creds and the numbers and path to profitability and margins to actually get love from Indian public, equity holders.
Okay.
The second is this conversation about trying to take companies to the NASDAQ directly.
Yeah.
Right? And that's something that we are all eager to sort of push for, because then you're getting global competitive, metrics to be able to list. If both of those happen, interestingly, the question that you asked before, the unicorn question, goes out of the window because the public comps will drive everything then.
Okay.
The first benchmarks for your Indian top sector leaders will come both from NASDAQ and from BSE and SE, and then everything else will follow. So, the path to 100 unicorns by 24-25 seems very realistic if we can pull off the number of IPOs in the next 2 years.
Okay, Shanti, do you agree with Karthik on this? Because you've also been part of the many consultations that have happened, with SEBI. Do you agree with what Karthik's saying?
No, absolutely. Because I think what we all are working towards is building shareholder value and wealth creation for everybody involved in the startup ecosystem, right? And really, till today, there has been not many ways, like your previous question, Shruti, is like there are not very good ways to create exits for the early stage investors and for founders, right? And there will be a fatigue which will set in if we don't have a very mechanized, systemic way to access that liquidity. And this is again one great way to enable liquidity to enter the ecosystem, because then it will become a self-fulfilling prophecy, right? Where actually you are kind of building a company, then you're exiting, and then that will create a lot more better founders. That will create a lot more early stage investing which will happen in the ecosystem.
All right. Before we wrap up, one final question to Pankaj, to what we've been discussing. I want to know, will 2021 be the year for SEBI to ease norms officially and have our unicorns list here?
I do hope so, and I fully agree with Karthik and Shanti that this should happen, and we're all looking forward.
All right, so we're positive on that note. Thank you, Pankaj, Vinay, Shanti and Karthik for joining us today. While 2020 was full of chaos, I hope 2021 brings a lot of good news and stability across all sectors. Wish you all a very happy 2021. Many thanks for speaking to us today.
Thank you for having us.
With that, it's a wrap on this edition of Startup Street. Stay tuned to CNBC-TV18 for more news and updates.